You're watching Single Process with Jo and Barb, a video series where we bring you the experts to help you go from a we to a me. Our episode today is on forensic accounting.
I love this one. If you watch TV, you always assume in a divorce someone's hiding money, so you want to follow the money, right?
Totally. We get asked this question so often. Do I need to hire a forensic accountant?
Right, so we brought one in. We're going to find out if you should hire him. So he's an ABV, and we'll tell you what that is, and he's also a CPA. He has his own forensic accounting business. David Gralnick, thank you for being here.
Great, thank you for having me. I appreciate it.
So what is a forensic accountant? Start at the top.
Okay, so forensic accountant is someone who traces money for purposes, and our purpose we do it for litigation. Majority of our work is in the matrimonial field, but we also do business valuations as well.
Okay. Sometimes I guess you would need a business valuation, a divorce too, right? If you own a business that's private.
Yes, quite often the spouse will have either an interest in a business or own the business themselves, and that could be marital property that could be needed to be valued for purposes of divorce.
And why is the value not obvious? Because people, sort of hide income through businesses or
Well, the value is not
disguise?
obvious because every business is different and every business has a different income to it. So you need to figure out what that income is and apply certain multiples to that in order to figure out what the actual business is worth.
So an ABV is what?
An accredited business valuator.
Okay.
It's a designation by the AICPA.
Okay. So typically, I mean, if you're getting divorced, you have to put a value on all assets that are commonly shared in a marriage, yes?
Yes. All assets that are going to be split need to have some sort of value on them.
So in some states, whatever you own before the marriage remains yours even if you get divorced. Is that correct?
That is correct. But there are other states where there is separate property that if you mix it with marital money, called commingling, that taints the separate property nature of that asset, and therefore it could become marital property, or a portion of it may.
But if you do have a prenup or live in a state where whatever you owned before you got married remains yours at the end of the marriage, how do you value that? Like I had $100,000 and where is the current value? Is that the sort of thing you do too?
Well, if it's a bank account, it's very obvious. It's
Right.
just whatever's in the bank. However, if it's a business, okay, so you may have owned the business before the marriage and you still own it at the date of you getting divorced, but there might be marital appreciation to it. If you were working that business during the marriage, there's something called appreciation. So you would have to value it both the date of commencement and the date of marriage to figure out what that appreciation
So
is.
date of commencement is what? It's the day you file divorce and the clock starts ticking.
Correct.
Okay, so your assets are valued on that day that you file.
In certain states have it as of the date of trial.
Because I would think if you know you're getting divorced, aren't you going to start pumping money over to the Caymans into a secret account?
Well, it's easier said than done, but there are people that do that. I mean, we've come across many a time where somebody has started taking money out of either their business or personal accounts, and they've moved it out to an account in their name, an account in a different country. But it's not as easy to do as you think because, first of all, you have to report that income to the IRS on a form on your tax return anyway.
And if you're somebody in a marriage who doesn't follow the finances very well, because that would be me. So, you say it's obvious, he makes $200,000 a year and yet you only see $100,000 on your income statement. If I'm not aware of that, then...
But maybe that's where you need to hire a forensic accountant along the way to make sure you are tracking the money, right?
So very often we're hired by people who do not trust their spouse.
Yeah.
So obviously if you're getting divorced, there's probably a lack of trust somewhere. However, there is a lack of trust with money very often. So for instance, a lot of people say my husband's making $400,000 a year and,
Is he divorced? I like that. Yeah.
Continue. Carry on.
So if he's making $400,000 a year and we spend $200,000 a year, but we have no assets other than this house, which has a mortgage on it, then something is strange. Something doesn't make sense. So you could hire a forensic accountant to try and find out what happened to that other $200,000.
Okay.
Now, there are times, though, when the spouse thinks that the other spouse is making that, and that's not really what they're making. Okay. So we do that as well, figure out what the true income of the wage earner or the spouse would be.
I would imagine this applies post-divorce too when you're dealing with alimony,
I was going to ask that,
right?
And also, sometimes the bonus changes or their income changes upward or downward, and you need to adjust for that.
Yes.
You get involved in that as well?
Yes, we do. We get involved in post-divorce all the time, trying to figure out if alimony has been paid and if it's the proper amount because somebody's income may have gone up or down.
So how often, when you have one of these cases, do you find that money is going missing? And
that's a good
how
question.
often do you find that people have hired you?
Well, he's being hired probably in these high costs. So in your cases, it's probably the majority of them.
Yeah, we find a lot of cases, especially when we're doing business valuations, where people are putting their personal expenses through the business.
Yeah.
We've even had cases where somebody was paying their brother a salary, and then the brother was paying him back personally. So he was deducting the salary, and the brother paid him back. He was hiding essentially money from his spouse doing that.
So often hiring a forensic accountant, if you've got suspicions, sounds like it may be a good idea.
It may be, every case is different, obviously. If you're a W-2 earner making $100,000 and then there's probably not much that's going to be hidden. But if there's a lot of money involved and you think something suspicious is going in, it's not a bad idea to hire a forensic accountant just for peace of mind.
Here's my takeaway. I think what you do is you tell your future ex, I'm hiring a forensic accountant. I think that cleans it up and scares the crap out of them in one move.
Is it an expensive process
It can be an expensive process. It depends upon exactly what we're doing, how many accounts you want us to look at, how many years you want us to look at, exactly what you want to do.
Does it have to go through an attorney for attorney-client privilege?
You don't have to go through an attorney, but a lot of attorneys want that attorney-client privilege so that they can make the decisions later on if they want us to be discoverable or not.
Okay.
So just explain that. If your lawyer hires the forensic accountant, the work product is subject to attorney-client privilege.
Correct. So if we're hired directly by the attorney, then we speak with the attorney and everything goes through the attorney. If we're hired by the party or the parties, because we do a lot of neutral work as well, then in that case, it's not subject to the attorney-client privilege.
Are you sometimes appointed directly by the courts?
We are. We are actually very often directly by the courts.
Okay. This is great. I think in general you want to follow the money, and it's easier to do than you think it would be. It's usually pretty clear.
It's not. It depends. Some people think they're smarter than everybody else, and they do things that, although they can be somewhat complicated, we're going to most of the time find it. A lot of people are concerned about cash in businesses. Cash in businesses isn't as prevalent as it used to be.
It's disappeared.
Right. Most people now use credit cards and debit cards for almost everything they buy.
Right.
Even when you go to the pizza place and you buy 2 pieces of pizza.
I think I got 20 bucks I got 20 bucks in my wallet. That's
right.
About
A lot
it,
of people don't even carry cash anymore. Yeah. So the cash aspect isn't as prevalent. But especially when you're valuing businesses, we see a lot of times people don't report some of their revenue. Especially you have medical practices, they get co-pays. Okay. A lot of times they don't report that. So what we do is we do a bank statement analysis. We try and figure out if they're depositing the money to cover what their reported revenues are. We look to see if their lifestyle based upon their either financial affidavit or net worth statement matches the amount of money they say they're making. Okay. If it doesn't, there's something missing. So, we may have to add certain income to the value of the business in order to get to the value of the business.
Okay.
Great. You know when to dig deeper. It sounds like even a superficial analysis allows you to understand whether you need
to focus a little bit more.
Right. For the most part, most of what you can find out is superficial, but if you want somebody to trace if monies have been taken from accounts or not deposited into accounts into other accounts, that's a lot more complicated and a lot more time consuming and expensive.
All right.
Good. We're going to put a link to your practice so people can find you if they want to hire you directly, but it's great information. Thank you.
Great. Thank you very much for having me.
So for more information on forensic accountant and following the money, check us out at thesingleprocess.com.